Are you thinking about converting your company into an S-Corporation? In today's video, we'll be going over what an S-Corporation is, the advantages and disadvantages of forming an S-Corporation, and how to convert your company to S-Corporation status.
What is an S-Corporation? S-Corporations are not a type of business entity. They are either LLCs or C-Corps that have been granted a special tax status by the IRS that lets corporations pass their corporate income, losses, credits, and deductions through to their shareholders. What are the advantages of being an S-Corporation? The main tax benefit of becoming an S-Corp is avoiding double taxation. All business profit is paid to shareholders in the form of distributions that are not subject to self-employment tax. However, if you're a shareholder and an employee of the company, you must pay yourself a reasonable salary before paying yourself a tax-free distribution. This makes the S-Corporation status very attractive to many small businesses.
What are the disadvantages of being an S-Corporation? Compared to C-Corps, S-Corps come with several disadvantages. First, they can only have one class of stock, while C-Corps can have more than one class of stock. This means that all shareholders must have equal rights to distributions in an S-Corp.
Second, shareholders' basis for deducting losses will only be increased by direct loan to the S-Corporation.
So what we're seeing here is that if the loan is funded by the S-Corporation shareholder, then the shareholder will most likely able to deduct the losses.
Third, all income that is passed through from an S-Corporation is taxed to shareholders, whether or not it is being distributed out.
So we get this question a lot from business owners. If I have an S-Corporation, if I withdraw cash from the business, do I have to pay additional taxes? Now, in this case, it's actually irrelevant because as an S-Corporation shareholder, you pay taxes based on the net earnings from the S-Corporation.
Fourth, shareholders that own more than 2% of the company are treated as partners for purposes of fringe benefits. This means they are not considered deductible.
Let's say you own a sole proprietorship, you will be able to enjoy the self-employed health insurance deduction, but you can't as an S-Corporation shareholder. And the reason is because even if you claim a health insurance deduction, because you pay health insurance costs through your S-Corporation, you will have to actually add those payments as part of your W-2. At the end of the day, the net effect is zero. Therefore, as an S-Corporation, you don't get to enjoy some of these fringe benefits.
Should I convert my business to an S-Corporation? Converting a business to an S-Corporation is usually done to reduce self-employment taxes. If your business has more than $10,000 in profits, consider converting your business to an S-Corp.
What is the process to convert my business to an S-Corporation? To qualify for S-Corporation status, the following requirements must be met. The business entity must be a domestic corporation, have only allowable shareholders. Allowable shareholders include individuals, certain trusts, and estates and do not include partnerships. Corporation or non-resident alien shareholders have no more than 100 shareholders, have only one class of stock, not be an eligible corporation. For an example, certain financial institutions, insurance companies, and domestic international sales corporation are ineligible for S-Corporation status. In order to become an S-Corporation, Form 2553 must be completed and filed with the IRS.
If you're interested in converting your company to an S-Corporation, please get in touch. If you found this video helpful, be sure to like, subscribe, hit that notification bell to get notified whenever we upload new videos. And from all of us here at the XQ CPA team, thanks for watching and we'll see you next time.